Hello traders, hello everyone, welcome to our new webinar. We have been away for the past 2 weeks. I mean, I was away, still the website, as you know, and the members updates were there like normally, but we didn't have the webinar. So finally I'm back. I'm still trying to get back into this market mood. As you know, there's a lot of stuff to catch up with, and let's not talk about the emails at all. So this will be a bit shorter webinar than usually. I'm also alone on the website on the analysis, so I have to take care of these updates, but I'm here now and obviously ready to give you my some of the fresh updates. Now before we can start, let me know if everything is fine. Can you hear the voice well? If someone can just let me know in the chat room, please, or here on the YouTube. Okay, so looks like we are ready to go. Someone is saying there's no vacation if you have kids. Well, yeah, I mean, it really depends how old are kids. Mine are 12 and 11, and I mean, it's big difference right now. We can do so many stuff together at this age. So I'm pretty excited whenever we have time just for ourselves. So, what we will take a look at, as you know, we have been covering stocks. Still, if you don't have access, it's free. Okay, you just register on our website, go to the stocks section, activate access, and you will be able to download these reports. Why I'm saying this, because the latest report was updated 6 days back. I think I covered like 13 of instruments. They're all listed here. So I think that we have some very interesting price action, some of the single stocks. So make sure to check this out, because I will not be covering those in this webinar today, but there are still a lot of analyses that we've been covering in this report, still fine and okay, and I will definitely keep on some of these updates through the week. So if you're interested in stocks, in the US single stocks, make sure to visit this page. Okay, so now let's start with the cryptocurrencies. Basically, what's the most important right now is just to realize in where we are in the current bull cycle. As you know, this is not the bull run that it's now here for the last few months, right? It's like everyone trying to measure like a new bull run risk on moves since April. We are basically in this bull run already since November of 2022, and you can see that this chart from our website, it's not up to date but still fine. You can see that each bull run has lasted around 3 years, and we are moving very close to October of 2025. So it means that we really could be in very late stages of this bull run. It doesn't mean that that's already been a top and we go straight to the downside. You just have to realize what can be in front of us and how you will manage your portfolios. Of course, it really depends of your goals. If you are involved in the cryptocurrencies for the last 6 months and you have some plans to buy something in, I don't know, in the next months, obviously then you will be booking profits. If you don't need money and you just accumulate more on dips and you are long-term holder, then maybe this is not really important for you. But overall, based on the cycles, I just would not be surprised if we really would try to slow down in the next few months, few weeks. And the reason why I'm saying this is also because if you look at this price action at new all-time highs, at the fifth wave, you have potential wedge formation. Okay, so there are there's quite a big possibility that we really are moving closer to potential top. Of course, the wave 5 should also contain 3 subwaves, so maybe there could be one more push to the upside. That's also our preferred wave count, but maybe trying to hold those current profits if you are in for the last few months, few years. I mean, I don't see as a point here to hold and just take a big risk here when we could be for just final push to the upside, while we could be in a very late stages of this recovery, since we know what the ending diagonals are going to cause, and usually they will cause a very strong and sharp reversal in price. So maybe we're not there yet, but just watch it very closely. But that doesn't mean that maybe some of the other coins will not do well. I mean, if you will look at the Ethereum, for example, I think that there we still have some room for more upside. But before we go to the Ethereum, let's take a look on the Bitcoin dominance. Now here we have a very strong sell-off out from that wedge. So what happened is that as soon as the Bitcoin moved above 100,000, of course, there were some traders, investors who were looking at opportunities on some of the other coins. So that's why we have seen a shift in flows into alts, and that's why, like, Ethereum, for example, has recently made an explosive move, strong recovery to the upside, while the Bitcoin somehow is not that strong anymore up here. But what I see right now is that maybe in the near future, if we really will see some, with the pullback that we are seeing right now, there could be some flows from alts back into Bitcoin, especially if there would be some deeper corrections going on. You will see that a lot of traders will obviously want to hold their coins in Bitcoin rather than alts, okay? Because if you're long-term holder, then I'm sure you want to look at more trusted coins rather than speculate in some of the alts. And that's why maybe we could see some in the near future, maybe even Bitcoin dominance could see some recovery. But if you look at the Ethereum dominance here, this also looks like it could be looking for some pause in the near future. It would be total normal maybe to see then the Ethereum dominance coming to the downside, obviously, while the Bitcoin dominance could maybe try to stabilize a bit if this current retracement that we are tracking is going to last a bit longer. But that doesn't mean, as I said, that that's any kind of a major top in cryptocurrencies. I still think that there could be opportunities, but maybe you will have to be a bit more selective. And as I said, the Ethereum is, in my opinion, still in a very good shape, and I think that there we have more upside. But just realize that maybe if we get some retracement here in the near term, could be a deeper one, could be much better opportunities to join this trend, especially if you're looking for some opportunities in the short-term scale. Now, the reason why I think that Ethereum obviously still has room for more gains is because if you take a look here, okay, if you take a look here, we still basically didn't cross these highs from 2021. Okay, so it means that there is still room for more upside, but that's certainly a very strong resistance. However, when it comes to the Elliott Waves principle, what we want to see whenever we call the end of the correction, that this correction would be fully retraced. So I'm still looking for a push closer to 5,000, then maybe even some extension blow-offs moves before market will reverse lower. But the reason why I'm looking at for some more upside here is also because if you take a closer look here at this substructure, you can see that we already have some overlaps, right? And these overlaps usually suggest that we are in a correction, and it can be a complex correction because we don't have only 3 legs from the highs. Looks like that could be some 7 swing moves, so still a corrective pattern. Now, where I would be looking for potential support? Well, if you take a look, if you will take a look on a smaller, or maybe just zoom this in a little bit, you will see that here you can count 5 waves up, right, within this wave 5, and here was the 4th wave support then around 4,100. And the reason why I'm looking at this level is because also I compared some of the previous retracements, okay, and there can be some, as you know, whenever you're in bull run, retracements can be very similar in percentages as well. So, and or in points. And what I'm looking at here, I'm comparing this wave 4 dip and this dip, which by the way I labeled as a wave E, but could be even wave 2. So I came out with projections for potential support here around 4,000 up to 4,170 or 4,200. Okay, so that could be a very interesting support, especially if we will have into that area a 7 swing drop. For now, that's not the case yet. The next thing is what I want to look at Ethereum is on gap. Look at this gap here on futures at 4,100. So I think that that's a pretty interesting level right there at our FIP support for the fourth wave. Not the FIP support, but equal lags support when I compare this this measurement. But even if you look at some of the FIPs, I'm sure pretty certain that could be quite interesting zone. Also, you have this upward channel, lower support here that could also try to limit the gains. So once again, we still haven't passed this old highs on the Ethereum yet. We have some evidences that we are here in a complex correction, and we have gaps on future that could possibly try to be filled, and then we see a push to the upside. And as I said, Ethereum dominance still looking fine, and maybe just in the near term this correction could last a little bit longer before market see another push to the upside. The next thing is looking at net unrealized losses on Bitcoin. I posted this chart on X. Let me just try to find it here real quick. By the way, in the meantime, you can press a like, please, or just if you didn't yet, make sure to also to subscribe to our channel. Let me just find this real quick. Okay, I think here it is. So here it is. You can see that net unrealized losses. What this means is that Bitcoin goes deeper and more traders, investors are in a loss closer we are at the potential support for Bitcoin. Okay, now here I have a scale going back to start to the beginning of May till today, and you can see that here we had a previous very nice on free occasions very nice retracement on Bitcoin, and here at the same time this data net unrealized losses, meaning a lot of traders were at the loss at that point when Bitcoin has made the deeper pullback. But now if you think that the pullback on Bitcoin could already be finished here, well, look where this data is. We are not even anywhere close to these levels. So in my opinion, maybe there is a bit of more time and price left to the downside before we maybe try once again stabilize. So again, this data show us that maybe there is room for more weakness. And that's another reason why I think that Bitcoin, I would leave it on the side and I would rather try to focus on something else. As I said, maybe on the Ethereum. Now, someone is saying, what about the Ripple? Well, Ripple, in my opinion, has made 5-wave reversal from the highs. And these 5 waves from all-time highs suggest that we are headed for slightly deeper correction. I would not be chasing markets here on Ripple. I just think that this pose is going to last. Also keep in mind that Ripple has made wave 5. I can show you it right here. Basically has reversed here from that all-time highs, and whenever we have 5 waves down from all-time highs, I just think we have to be very, very careful here. Okay, it doesn't mean that that's a top in place. We could still stabilize, but I'm really not sure that's going to be the case now, because here that was a 5 waves down, and that was only a 3-wave rally. Now let's take a look also on some of the other markets. So by the way, this was just a very quick overview for the cryptocurrencies, and if you obviously are interested in more of this analysis, make sure to visit us at wavetraders.com. We have this coverage on a daily basis and a lot of other stuff as well. Now let's take a look on the 10-year US notes. Basically, I'm looking here at the US yields, and as you know, the US yields recently turned to the downside. It also made some downward pressure on dollar as well because of potential rate cut that could maybe occur in September, but because they still are not convinced if they should cut, even if they will cut, it will be only one and done, in my opinion. Because if they are not convinced now that they will cut one or done, maybe there's no chance that they will cut twice in a row, in my opinion. So even if they will cut, still yields could stabilize. And when I look here, maybe there would be some rate cut expectations trying to press the yields towards even lower levels on the 10-year, maybe closer to 4%. But when looking at this price action, it really looks like it's a triangle. If I try to force the wave counts and say that that was some kind of a wave 5 and you have some kind of a bearish setup here, I mean, I would really not be following the Elliott Wave rules. Clearly that was an uptrend, that's a sideways consolidation. So the next big impulsive move should be to the upside. Of course, in the short term, as I said, maybe we could see a push closer to the lower trend line of this triangle before market potentially will bottom. So if wave E will see more weakness closer to 4%, that's when dollar could also see another leg to the downside, where, by the way, we don't have this completed downward structure yet. Okay, so if you take a look here on the dollar, you can see that we basically made only 3 wave rise. And in our last webinar, I said that that's still a 3 wave movement, but we were at the key resistance area up here around 100 level. And since market made a very sharp reversal to the downside, it's even now trying to break the lower side of this corrective channel. This really tells us that there is more weakness ahead. But because you have here, after this massive strong reversal to the downside, you now are experiencing some overlapping price action. So that's the summer range that I have been also warning back in June, that during summer there could be some nasty swings on the dollar, and we are basically still in range. But since market made still lower lows and lower swing highs down from May highs, but because of overlaps, this really tells me that bears down here are not that strong compared to the previous strong drop. So in my opinion, bears are losing strength, and I would not be surprised to see something like that. Maybe retest of the lows. Fed would be forced maybe from Trump to cut the rates. They will say one and done, and you will see market doing the complete opposite reaction. So for now, this dollar weakness could still come from the rate expectations, from the potential cuts. More cuts are expected, more stronger can be the sell-off. But as I said, if there will be just one cut, dollar will stabilize pretty quickly. Now, so when it comes to trading, of course, there could be opportunities to short the US dollar, or on the other hand, to look for some long opportunities on other major currencies like pound or euro. I still think that these are looking quite well. So firstly, if we take a look on the euro dollar, again, the flip side of the dollar, of course, ABC down, reversal to the upside, maybe some channel resistance. Now if we see a pullback, could be a temporary, maybe even head and shoulders continuation pattern. Now I heard this before, that they are now not head and shoulders continuation patterns, but if you do a research, there are head and shoulders consolidation continuation patterns. They are not only top and bottom head and shoulders pattern. So here I'm looking and trying to maybe to match this with the wave principle. If we get some pullback here for a wave B, I think that 1 1590 is a first interesting support. Below that you have 115.25, but the key level is 113.90. As long as we are above that level, above that price, in my opinion, that's still an uptrend that could take euro up towards 1.2 level, and then major things could happen up there. Looking at cable, there are less chances for potential cuts from Bank of England, so traders don't see cuts from Bank of England maybe this year, and this is something that would keep cable here supported. By the way, we have seen a very strong and pretty powerful rebound from that 131.35 levels. So if you see a pullback, maybe just patiently watch something similar like we have seen here in Wave B in the different direction now to the downside. It could be some very interesting for potential opportunities on the long side, especially if we see a support around 1.34. I think that this could be quite interesting zone for the rebound. Now maybe on a smaller scale, by the way, we also cover a lot of this for members on the intraday basis. Smaller scale, the support could be around 134.80 if we think that we are still in a fourth wave of this first impulse. But overall, after dips, I think that cable could do well. Looking at Aussie, it's still trapped in a range. I don't like try to figure out the wave count on this mess. So what you usually do, you just maybe zoom out. Okay, maybe even better. Let me check the weekly here. Maybe you zoom out and let's see what happens there. What's happening there? That was a very sharp rise, very deep, never-ending retracement. But we have seen a rebound from the 78.6% here. So back in April, these levels marks the bottom. Okay, as long as we are above that level, I would anticipate even a break above this trendline resistance. So watch out for more gains here. But of course, after this consolidation will complete itself. Now, if we take a look here, it doesn't really, we don't have enough of good price action to say that this consolidation is coming to an end, but this certainly looks like a consolidation, like a range market, right? So if you're looking for opportunities in this kind of an environment, what you should watch for is maybe just rather focus on the lower side of this range. So I think that support here is around 6,400. It's still pretty interesting. It was a very strong resistance, firstly here back in February and March, not to mention the key support here back in April and July of August of 2024. Now, as long as we're above that level, of course, on a retest, this could be a very interesting zone for another push higher. Looking at dollar CAD, I think has unfinished business to the downside. So here we have, actually, I just switched from 4-hour to daily time frame just to see the charts a bit cleaner here. So that was a wave 2, nice extended wave 3, and now we are just in a wave 4. We already have some very interesting reaction down from this resistance here around 1.3870. So this sell-off was pretty important one, okay, because when the price was trading up here, it was not really clear if this can extend to even higher and maybe we'll have something else. But since market reversed to the downside, it even overlapped the previous consolidation. Well, this gives an impression that this is most likely a correction. Still not sure if maybe Wave C could see a retest of 139 as an ending diagonal and you see a reversal down a bit later. But overall, wave structure suggests that rally's recovery will be just short-lived and that there is still one more push to the downside that maybe could occur. So I also will have a very close eye on this one and we'll keep an eye on the price levels around 1.39 up to 1.4. That's a pretty strong, interesting resistance. I would not be chasing market here. I would rather wait maybe in slightly better substructures and a clearer wave count to complete wave 4 rather than saying that wave 4 has ended here. I would be much more interested in this zone. Now let's take a look on dollar yen. Now, as you know, I've been also updating these wave counts pretty regularly. I think I also shared a lot of stuff here on for dollar yen on Twitter weeks back, and we said that this could be a very nice ending diagonal with a push closer to 150, 151. We failed up there and see a very strong bearish reversal. What's the second most important thing is that we broke the lower trend line of this wedge pattern ending diagonal. So basically, I think that there will be more weakness. Again, as I said so many times on Mondays, whenever you see some sharp moves on Monday, okay, in the first 24 hours of a new trading week, this could usually be reversed sessions later. So I think that current recovery is a pretty nice one, that it's happening right now for a wave B. So maybe wave B could still transform into some kind of a triangle, could be even irregular formation where you can see a retest of 148.50, maybe even 149. But if in the first half of this week we will see a move into this resistance area, I just think that we will see a sell-off in the second half of this week. So through the trading week, there will be very rarely you will see market just moving into one direction from Monday to Friday. You will usually see something like this. So if in the first 2 days, 3 days, we are moving to the upside into that resistance, I would anticipate at least temporary sell-off here from that area. Where I will be wrong if the market moves above 150.90. But if you here look at the daily chart, you can see that I'm still observing the potential triangle, and ideally we are in the middle of this wave D drop towards the lower side of the range. Now let's take a look on gold. Set on gold few weeks back that most likely we are going to stay in this range for a while, and this range is still not finished, and it looks like that we are in a triangle like we have been saying before, and we could be very closer to a potential breakout. Maybe this breakout could occur later this August or at the start of September. It really depends how stocks will be trading, what yields will be doing, but overall I just think that this structure is pointing towards more upside. 3,600 is definitely something to watch for, but keep in mind that if that's a triangle, then moves out of triangle will be final in a sequence within a high degree impulse. So when everyone will call a breakout, when price will be trading at new all-time highs, and you will see media screaming that gold is at new highs, that's when you should be on an alert for potential reversal, because you will see prices in a fifth wave. Okay, so as it looks like right now, even in the short term, I think that there could be some more upside. I would be watching the support around 3,300, and from there we could see a push and a retest of the upper side of the range. Not sure if that's going to be a wave B, maybe even a wave 3 breakout, if we consider that wave E might have been the sharp one and has bottomed here. So with the intraday wave structure, I also posted this chart on the hourly time frame. It's not here. I will save this for members. I also shared this with our members, the intraday time frame, where I think we have some price action that tells us that we could see the next reversal to the upside. But again, it's Monday. Don't get too excited on Monday. But if we see a retest of slightly lower prices Tuesday, Wednesday, I think this could be quite interesting reversal days. Now let's take a look on crude oil. As you know, there's some optimism that maybe leaders Trump, Russia, Ukraine will finally end maybe a war in Ukraine, but still, I mean, this is just pure speculation. We know that this is never ending story, but still, market moves on expectations, on a sentiment. And looking at the crude oil, we've been saying that crude oil could see a retracement back towards $60, and I still think that this is coming into play, maybe even 58, where you see the 78.6%, but I would not get too excited down there, especially if you will see some positive news confirmed coming out and energy prices will break to the downside. Later on, market could stabilize. Okay, still could be buy the rumor, sell the news impact. So watch for the potential stabilization down here. But at least in the short term, as I said, this impulsive decline for wave C, in my opinion, is still incomplete. Even wave C to wave A targets are much lower. But if you take a look on a daily time frame, just let me check my notes here. You can see here that we possibly could be in a wave B if we consider that market might have accomplished fifth wave drop from a triangle here earlier this year. So we could be in some nasty consolidation that could even take us higher at some point. But for now, as I said, $58.60 is then a key support. I also have another interpretation here, which shows that what if that's some kind of a diagonal and you will see a retest of $50 per barrel. That's also very possible, if not probable. But still, towards the end of this year, maybe November, December, that's when I think that crude oil could really start a new cycle here, and that we could see stabilization. And these stocks, it's also suggesting that we could potentially see another reversal to the upside. As you know, oil production stocks, these have very tight correlation with gold, and if here, with crude oil, and if here we are in a wave E, final leg of a triangle, then it means you will see something like that. Then of course these companies will profit if energy prices are higher at the same time. Now let's take a look also on German DAX. Now German DAX is testing the upper trend line. It's not really breaking out yet, so you cannot call a breakout unless you see a daily close above 24,650. Then I think that 25,600, 500 could really come into play. So after the pullback, maybe watch out for more gains. So on dips, maybe the support could be around 24k. That's the first one. The ideal would be much lower, at the lower side of this triangle range, but not really sure, convinced that we'll get into that area. Sometimes wave E can be a bit smaller. Also, the final market for today is going to be the S&P 500. We are rushing higher into fifth wave. There's still room for slightly more upside to retest this upper line of this impulsive or Elliott Wave channel, if you wish. So that's the perfect area for the fifth wave up there of this parallel channel. Then maybe in a few weeks you will see some evidences that we are stepping into new correction, but for now I don't think we are there yet. We are still missing a few subwaves to complete this current fifth wave. Okay traders, that's been my analysis for today. I hope that you enjoyed the content. Make sure again to press a like, to subscribe to our channel, visit us at wavetraders.com. As I said, stocks are free access. I will take care for the updates maybe later this week, that we will have some new single stocks analysis here. Cryptos, FX, it's a paid service. Make sure to check us maybe for a trial, test them out, and you will get this kind of analysis on a daily basis. Traders, good luck this week and talk to you soon. Bye.